Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us as always to talk all things markets, University of Missouri's Scott Brown. Good afternoon, Scott.
Happy Friday, Megan.
Happy April Fool's Day. No jokes today, right? No pranks.
So no pranks. We'll only talk about the real data today.
That's all that matters. We only want the real numbers. No jokes and tricks coming from you today. I don't think anybody could handle it, right?
That's right.
All right. We're going to talk hogs and pigs. We're going to talk input prices. We're going to talk consumer demand. But to kick things off, let's recap what happened this week in the markets.
Yeah, so cash cattle this week, Megan, were 40 cents higher. That now is $21 above where we were a year ago at this time for fed cattle prices. Feeder cattle markets this week were also stronger, up $3 to $5 for the week. On the future side, the lean June live cattle futures contract was down $1.80, and the May feeder cattle contract closed up $1.05. We did see nearby corn that was down 20.5 cents on the week, I think helping on the feeder cattle side of things. Choice box beef price moved up a little more than $5 this week. Really strong ribs this week, I think, helped push that box beef price higher. On the pork side, cash barrel and gilt prices were 65 cents higher this week. The lean hog May futures contract closed down $4.60, giving up some of the strong gains of last week. The pork cutout value lost 75 cents, really led by what was weaker belly prices.
I will give you a pass. We switched front month contracts this week. So we both are trying to figure out and remember which one was the front month. I had the problem beforehand, and I think I put it in your brain. Sorry.
I'll try not to say lean cattle futures anytime soon. All right.
all is well. When we take a look at some of these numbers, we have seen it's been kind of interesting watching the cash hog prices just in general. We're at levels that I would never have thought we would have gotten back up to compared to where we were, a year ago. How much, and we're going to talk about this in the quarterly Hogs and Pigs report, how much concern do we have about availability and really having the right amount of supply? And are we concerned about tightness in that area?
So for sure, so what are the headlines all been? It's all been about food price inflation. And when you talk about that food price inflation, oftentimes it's beef and pork prices that the discussion turns to fairly quickly. And yet when I look at where we're at today, we're producing less pork today. And when consumer demand for those products stays strong and you're producing less, we likely continue to get higher prices going forward for consumers, not lower. And so I think, just the tightness that we're beginning to see certainly keeps prices higher than they otherwise would be. And even in the case of beef production, we're going to be in a situation where fewer cattle are going to come to market as we continue through time here. So both of those markets tightening a lot, especially relative to what I'll say is that 2015 to 2019 period where we had some pretty rapid growth in both.
I have other questions, but we'll wait till we get to hogs and pigs to get into those. Let's take a look at weekly slaughter numbers. Where are we at this week in comparison to where we were a year ago?
Yeah, so for the week ending April 2nd, a run of 639,000 cattle this week. That is down 20,000 head from a week ago, but up 36,000 head from a year ago. And on the hog side, a run of 2.442 million head of hogs this week. That's up 23,000 from last week. And down 18,000 from where we were a year ago.
And then when we look at comparisons, when we talk year to date, how are we tracking with where we were a year ago?
Yeah, so cattle slaughter, I have up 0.3% now for year to date. And hog slaughter is the one we've already kind of alluded to. It's down 6.6% year to date. So a lot fewer hogs than where we were a year ago at this time.
All right, big report this week. Quarterly, well, I say big report. There's actually two pretty big reports this week. Quarterly Hogs and Pigs report, first one to come out. And I'm going to say that the report really is overall pretty bullish on the hog side of things.
Yeah, absolutely. I go, well, you can't describe the report except bullish when you look at where we came out. So overall hogs and pigs on farms March 1 came in at 97.7 of a year ago. That fell outside the lower end of the pre-report estimate. The pre-report estimate midpoint was 99%. So fewer overall hogs and pigs. When you look at the breeding inventory, it was came in at 98.1 in this report. That's outside the lower end of the pre-report estimates and well below the 99.9 pre-report average. So most folks thought breeding inventory wasn't going to change much, yet it's now down 1.9%. Pig crop also lower outside the pre-report estimates. I look at intentions, farrowing intentions here for a minute. March through May came in at 98.5. That's also outside the lower end of the pre-report estimate. And June through August came in at 99.4, also slightly below the low end of the pre-report estimate. So everything to the left of pre-report estimates. And beyond that, when you look at what USDA did for revisions to previous data, the December 2021 breeding inventory was reduced another 55,000 head in the latest report.
Obviously, this would indicate, for the most part, we're going to see continued tightness, continued contraction, probably higher prices. Does that at some point spur expansion, especially when we've made these investments in increasing slaughter capacity as well, and we're able to handle it?
I guess the way I look at it right now is there's so much uncertainty. I think when you look at producers' opinions of the world, they don't know whether if they produce more hogs, there's going to be the ability to process those hogs. And so to me, we're really starting to see out of the data we're getting this idea of we're going to sit on the sidelines for maybe longer than traditionally would be the case. So I'm not sure we get a quick build up. Now, high enough hog prices, of course, will induce expansion. I think feed costs where they are and other input costs where they are, it's almost everything is not working in the favor of expansion very quickly. And I think that's borne out in the data that we get back in terms of this Hogs and Pigs report.
How much does China's investment into rebuilding their herd play into that whole global picture as well?
So it does for sure. And I sometimes will go back, you look at 2020, we took 1 billion pounds of US pork and moved it to China. Now COVID had some impacts there, but ASF also had big impacts. And since then, you've not really seen anything but China continue to slowly back away from US pork into China as they rebuild. It's not surprising in my mind that if they can produce more domestic pork, that they are going to use less US pork. I think the thing that I keep looking at is that perhaps we have Chinese customers that have changed their interest in consuming pork like they did pre-ASF. That may be one reason why we see more beef trade happening to China as well. Consumers got a taste of some other products. Chinese consumers were the largest pork consumers in the world. And again, taste and preferences may have changed a little bit that could not go back to where they were, which means we don't need near the amount of total pork being produced in China as maybe we did pre-ASF.
The other big report this week in terms of our livestock producers, prospective plantings came out, and all signs really point to higher input costs and higher feed costs in the near future.
Yes. So, of course, I always like to start by reminding us these are prospective plantings, not actual plantings. We'll get acreage report at the end of June, which I expect some move around in acres depending on the spring. But when you look at what we got out of prospective plantings, 89.5 million acres of corn being planted this year, that's going to keep corn tight. To me, that potentially pushes corn prices higher than I might have hoped. Of course, a really good weather year can still put a pretty big crop in the bin, but we're counting on higher yields now, I think, to keep that corn S&U in better shape. On the soybean side, more soybeans, almost 91 million acres of soybeans being planted this year. That might be helpful, although we keep seeing soybean meal prices that are also fairly high. I will say the other piece here, fewer hay acres. We continue to chop away on hay acres. And here's a case where I expect the cattle industry is going to continue to see at or near record hay prices, as there's really no acreage response to what are hay stocks that have tightened dramatically over the past 12 months or so. So tough on those cattle producers that are depending on grass or hay for the cattle.
And then not only that, I mean, just the drought conditions too, and we're already short supply, short crops there, and starting off on a not great foot going into this year.
Yeah, when you look at Texas and Oklahoma in particular, and there's a reason why we say Texas and Oklahoma first, because they're number one and number two in terms of beef cow inventory. You know, you've got a large percentage of area in those states that are D1 or worse drought conditions already, that they're needing green grass already. And so we certainly don't have signs that we have better weather conditions. And in fact, maybe some signs will get worsening conditions relative to 2021 when it comes to dry weather.
It's definitely something we're going to have to keep our eye on and keep watching as we go through the year. Let's switch sides and talk a little bit on the demand side of things. Restaurant Performance Index came out this week as well. Talk to me a little bit about what you take from that report.
Yeah, so February 2022, we actually got a bounce back from what was some lower data in January. The overall index was up 1.6 points in February relative to January. To me, that's a little bit of the coming out of the big caseload that we saw in January of COVID-19. Current situation, 1.6 higher. The only piece of that report that's maybe a little less positive, expectation side of that report came in below previous month, down 0.6 points relative to January. I think there's still concern about overall inflation, fuel prices that have made that outlook a little less positive going forward.
Scott, let's talk jobs as well real quick.
Yeah, if you look at the jobs report, we got 431,000 new jobs for March, and the unemployment rate fell to 3.6%. That 431,000 jobs is below pre-report estimates, a little below pre-report estimates, but we are continuing to see more jobs being added. And so perhaps that helps us on the demand side of the equation. So even though we might be worried about an economy that's slowing, the jobs report really doesn't suggest that we're seeing a whole lot of reduction in the number of new jobs that are available. So hopefully, again, some stronger demand coming for our beef and pork products as we look at that jobs report today.
Sorry, we had a guest. I apologize. He was very curious about seeing what was going on today. Scott, when we talk about jobs demand, we know prices are going up. How important is it for us to continue to have strong jobs reports and be able to, when we're looking at salaries, being able to afford and keeping our consumer demand strong?
Yeah, so I think it is important, and I'll often now talk about it. It seems to me that those low income earners, those are the ones that I'm maybe most concerned about as we think about the number of things they're paying more for today. It crowds them out much more quickly. And we want to be in a situation where they can afford to continue consumption of beef and pork products. And so we're going to have to watch that side very carefully, and hopefully they end up with more money in their pockets, not less going forward. And that gives us an opportunity for them to see their demand for beef and pork products stay strong, even though they're paying a lot more for things like fuel, that they can continue that purchase of meat products. I think that's the risky piece of all of the higher prices that they face today.
Scott, as we wrap up today, taking a look at reports for next week.
Yeah, so we get a little bit of international flavor here with monthly trade data coming out midweek next week. And we finish the week with USDA's WASDE report.
All right. We will talk to you next Friday. Have a great weekend.
You do the same, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there. And for some great podcasts while you're in the tractor, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.